Alrighty. Good morning, YouTube. It's time for a little bit of a pre-market breakdown. We're going to do this one live with the class here in the morning. It's 8 a.m. on the Monday. We've suffered a beautiful wash here from some over weekend hype news on AI. So I do want to talk about this a little bit and how we're going to set up. So firstly here, one of the big things away from our live trade videos in our lessons on Saturday that we have done. Okay, I just want to point this out. We did a class on AA sentiment, just sentiment trading, and we talked a little bit about this indicator right here. And I brought up a little bit in there. Early 30% is the average on what you see, and then I said when it starts to tank below or above that 30, you can do the math between the neutral. It also becomes a very heavy bias for the opposing move. Okay, for the opposite move, because remember, this is dumb money, right? This is dumb money, right? So we had the, let me move this thing over real quick here. Oh, thing always resets and gets in the way. There we go. So looking at the week of January 15th here, right? When we had this ender coming in, week 113, notice this giant green candle, the weekly gapped down on SPY. That was a weekly gap, right? So this is where we knew to go long. We did the opposite of the AAII because 25% only were bullish, 40.6 were bearish. You do not want to be with the trend on these people, okay? On the AI sentiment. These are retail dumb money. If this many people, 40.6% right there, are going bonkers for a short, you do not want to be with the dumb money, okay? Inadvertently last week for the 122, because the Trump inauguration, the short week that flew up, so on and so forth, 29% bearish, 43.4 last week, ending right here, right? 120. So when we see that, we have to do the opposite. This was part of the class there. So generally, a neutral regular market, you're looking at 33.33333% on each neutral, bearish, and bullish, right? And when we look at the ending weeks, we need to see how many idiots, the dumb money, that's us in retail, are all looking the same way. Okay, so I just want you to take that into consideration because we get the AI in the trade exchange. We post that news in our daily notes every single time. So not only did we say, hey, heavy's coming up on this short squeeze, but man, coming into last week's close, 43% bullish, we cannot have that. That is a no-no. So when we don't have really good 33.333% across to bullish, neutral, and bearish, well, that tells you something, right? The opposite is going to happen. So the sentiment was obviously way off. You don't want to be with retail traders. Big takeaway there. Very, very basic stuff. So we get that free with the trade exchange every day. So again, like always, go in your Discord, go to the daily notes section, click on that link, and we have everything in the daily trade exchange here in our Discord. And what that looks like we did on the YouTube breakdowns, that goes into, that goes down into here in a PDF, and it gives you top earnings, top losers, all the earnings for the whole week, the AAI sentiment, the weekly sector performance, the top S&P, the year to dates, where we are for fear and greed. There isn't an indicator it doesn't cover. So click that link in the daily notes, and we don't have to worry about everything else. Everything is right there every week. So there's a lot of free sites they give that out too. So no reason to be with us guaranteed for that. That's a very easy get to indicator. So let's do a little bit of a breakdown on what happened and what we've seen in the Discord and what we had been calling here this morning. So on the NQ, this is a very big trend line, and I love trend lines. We just don't use them as much when we don't need them. But when we have big ones like this from an all-time high and we start the roll here, look at NQ's all-time high, cutting through all the lower highs. When something breaks out of a trend line, we obviously look for what? We are traders of confirmation above all things. So when something has a breakout, we don't just assume to buy highs, close eyes. We need a back test to go long, right? And we've been waiting for a pretty decent correct for quite some time. But we have the news, fear, hype, and greed, which always trumps technical analysis. Fear, hype, and greed always trump technical analysis. Okay, I could say it another 50 times, but it doesn't matter. Some people just, want to start with TA. It's always hype. It's always fear. It's always news, right? So as we come in here to the 5-minute chart from, right here, we see the break. We see the bounce from the 100 EMA, and then we called long because this was a knife overnight, right? So I was watching it all morning, and knives, we play with knives, dull ones. So we have to take into consideration exactly what's going on in the market. So when we see psychological catalysts that usually trip up the dumb retail, right, which we try to avoid, 21,000 is psychological. And again, psychology and psychological targets with algorithms are hand in hand. We know that something like an NQ would come down to that 21K, and everybody in their mind, like a regular person, would be like, oh, this is a great bounce point, 21K, it's a half hold. No, not on NQ. That's not how it works on NQ. We slip past usually. And when we get a slip this gnarly at 21,000, which is supposed to be a huge support resistance, which it is psychologically, but we planned for this trade, it went down 234 points after that. That's when we went long, because we know how to trade NQ very well. The personality stipulates it's very hard to acquire once in a while, but that's its trait. So we did grab some really big greens on the upside here after the 21K wash. All we had to do is ride the 5-minute 10 SMA, right? So that 5-minute 10 SMA, boom, on the blue, boom, all the way up. I gave out a target here in our chat for the Discord here, fair value gap, demand zone, and then of course another one at 22,008. But I also posted this picture for a chat and said, for the pre-market, all the good pre-markets are gone because of back-tested confirmation, right? This all the good ones are. So all of our super good grade A trades were coming from this low. Here's the trend line. This is that big trend line that I just showed you on the daily. It broke it. What do we do when we break something? We generally retest it for confirmation of resistance. So it has to go through a recycle. So this long portion from the slip all the way up to the fair value gap and trend line, that was our long, right? So that was a really beautiful long call here, and that was the main reason why. We didn't really need too much. We had 3 big indicators here. That was the 100 EMA on the daily, obviously, right? High or low. We had the trend line that snapped, and we know how slips happen, 21K. And then we had a super big supply zone at one time. We had a huge close right here. So all of these candles, we don't need to chart off all these dojis and all these whatever. It's 21K, okay? Psychological level. We know that. We don't need to chart off all of it. We can see the daily interactions there. We only need the one level. So when it slips 21K, right? All the long buyers start buying in here as retail dumb money. They don't understand the personality cues, slips, blows them out, and walks itself right back up beautifully. Now, the 1-minute chart also told us what was going on. This was another call I made over the 100 EMA to the 200. So we had this little bit of a 100 EMA interaction, but we hit it so many times prior, and we finally did a 21K slip. This is the time where the algos can allow you to walk it back up. So we said right here, again, long over 21K to the 200 SMA target. So we caught this one right here, 68 points. Now we're in our last long, which is drive off the daily. So into the breakdown now for QQQ and the SPY. So right now, we are dealing with the gaps and algos. So like we said, the price action is most likely going to stay very close here to the daily gaps. Now we have suffered, obviously, yesterday's lows is up here, a massive gap down into the pre-market, and we slipped the gap right here with beautiful speed. So again, once it just started basing, all you got to do is wait for protocols to break prior highs and to grab a higher low, then you ride the trend back up, especially on such a massive move like this one, where we get a dump through the night on hype, fear, greed news. So if we are this far away from yesterday's lows, we are in fact due for a gap and go to the downside, right? This hype, fear, and greed, the big bubble. Our entire market is developed off of the bubble of AI, very similar to the dot-com bubble, right? So the AI bubble finally got challenged as we talked about in Discord. It finally got challenged by DeepSeek, right? And then the hype news over the weekend blew out of proportion, and everybody's like, "Oh my goodness, it's the world's ending," right? And that was the psychology of watching the news over the weekend. And we know about hype, fear, and greed, and that's one of the biggest precursors of all things in the market. That's number one. Anybody can do technical analysis. It can get blown out any point of the time, yada, yada, yada. So the Discord, we talked about this late morning. So we have a gap and go to the downside. So we posted this one at X, posted on Twitter too yesterday. So right after the open, yesterday evening. And it said a gap and go to the downside for open here. Golden levels below all need tags. So we were sitting at 21,641, and we said we need to come down to 21,267 because I had a bunch of gold algos. Last week and the week before, I posted these in our chat and said, when we turn around and go down, don't forget these. That is your target. Boom, 500 points through the night. Now, obviously, it went way faster through there and it went way lower, but that's not the point. The point is we got 500 to the right way, right? So With that being said, we did have a beautiful algorithm target here that had smashed in, and now we're waiting on retraces. Now, it's another reason I did 21,208 today for a long watch out of the gate from the gap, and let's go over this place. So right now, we're going to be long biased anything over the gap, but we need live tag. We talk about first tag and live tag a lot. Where does this gap come from? On the daily right here, okay? So we've far superseded this gap. We've superseded two other gaps on SPY. QQQ's gap right here is the one we're dealing with now, and that is the one that is going to be leaving, obviously, this wide gap down. So what are we going to do with that? Well, we need a live tag. So as I already alerted in Discord way back here that, hey, careful, we're getting close to open. We're getting close to 8:30 a.m. Central, right? For me, for market open. So that means price action could get stuffed and chopped. Why is that, Brandon? Well, we need a live tag of the gap, right? So we're not actually looking for a full clean move till open is out and the algos let it go, because right now algorithm trading is our facet. That's what we do. So the algos will pin this right to the gap. So here's your daily gap, 510, 511, right? That's a very wide range, 40 to 60 points right here. And we need live tags. Now, we didn't create one algo, but two, right? So mark off the low of this one, because that's going to be a deciding factor. And we have two different algos to watch. And this would be, to me, the scam zone. This would be a zone to watch if it dumps into this where we actually get the continued long. So like I said, if we're taking profit here in pre-market, we said, this trade might not work out till open. So, don't hold. We got to chill. We're going to see an opportunity to see the gap hold and push. That'll be first tag. Remember, this gap has not been tagged at all. And this gap right here is developed off the daily. So algos, again, as we always say, we'll be watching gaps. Gaps are always number one. I can predict any amount of, price action stuck, magnets, and chop if we get a move like this. This is 100%. So when I said the sucker is going to stick right here, that was the goal. So at the open, it's going to be very volume-weighted average price. Watch the 508 support, and long call it is. So we are going to look long biased from two zones here up to the golden pockets. That's potential. I'm probably not going to be holding anywhere near that high. Obviously, the range is going to be so blown out today, guys. We're going to be trading ES. We got to go to the smaller, easier market, because that's going to be very scary on NQ. Pre-market NQ is fine, but we got to go to the small, the kids zone, man. We got to go to the ES. So over this gap as well to the first golden, these are two different trades that I'd be looking for at the open. So we have a really big means of support through the algos. We have a really big zone that we know we're going to open up into 510 the gap because it's on the daily, and we're going to look long if we hold the blue zone. Simple as that. So above the blue zone, we'll be looking long into the GPs. We got to maintain VWAP for that to work. If not, we could just do a gap and go and slice right to the pre-market lows. So we're going to be waiting for a new long build position because it was getting too late in pre to hold the other, as noted. Now SPY, exact same thing here. But as we see in SPY, it gets a little bit more interesting here on SPY. This is where we'll be trading the big accounts today, most likely, where we have the golden fib. And this is from last week. And we said, hey, this is a high range with no GP tag. So the all-time high candle right here, we're going to point this bad boy to the downside. We had this on here last week. This is where all of our short bias came from for the Friday short, and we nailed all that. But now look where we're coming down to. Here's the gap that we're playing. Well, what else do we have? The 423 extension, 591.76. That's from this daily, right? Right here, 123 to the downside. We drew that last week. Let's look at what that looks like on the intraday. Wow, right where we bounced. This is the second reason I said the knife was over here in pre, and we can start looking for that walk up because of SPY. So not only that, 591.76 pre-market hit, boom, look at that. That was the reversal candle. So tough, right? So beautiful. Range of hit right here on our daily candle. 591.76 is support. Now, the difference between the two, right? This is the hard part. Here's the difference between algos for this morning. Let's look at the Q's algo versus the SPY's, right? So we'll put SPY on the right and Q's on the left. And this is the biggest problem here. SPY, the better market than Q's, is inside and going towards the GP and under the gap. Those are all negative things. Q's is 100% opposite. Q's actually has to wash down here first and able to kind of walk back up. SPY is actually already on the trend because we always fib out high lows of the algo. So if the gap holds right here on the bottom, that is your long zone, unfortunately. So we have this tight box right under the gap and into the algo fib. And this is where The SPY has to hold, even if it just doesn't drop, doesn't have to go up. It just has to hold right here. SPY has to hold in order to move it back up to either 596.36 or the 2618. Okay. Now there is a lot of points on deck here. Just be careful. 47. Okay. SPY is going to be moving like NQ today. When the VIX gets this high, it is up to us to always position accordingly. It's always the best thing we could possibly do. Position accordingly. Slow down. Very small size, right? So the whole outlook is literally the supports here. We hold. We get a little bounce out of the gate. We're going to be filling the gaps. So I'm going to be long from right here at the golden pocket area. And I just want to get a long scalp that looks like this. Comes down into the GP, anywhere in the green zone, long to the top of the gap for the fill. So our green zone on ES is going to look like this. That's going to be our trade to the top of the gap. NQ, I might play some micros over there. We'll see which one sets up better as always. So that is going to be the entire breakdown. So we're going to catch the one and done trade scalp. Over unders are golden pocket of the algos. And then, of course, we have some long-standing Fibonacci's here to work with on SPY, which brings us at 591.76. And the main reason and the main takeaway, if you haven't noticed yet, from all of our teachings, this is the same thing we just covered on Apple on YouTube and one of our live breakdowns as well. This is double gap association, kinda, right? Here's one gap, here's two gap. Here are the candles in between, which means that these two candles have double gap association. There's a gap above and a gap below. So if I were to take these two candles, because that's where the gaps are, that's where the algos are going to look for the most here. I'm going to turn these neon green just so I can see them. Obviously, the bounce happened where? Right at the floating candle. What do I always say about double gap algo candles? They are so important to historic support and resistance, right? We also need to move back up to the 10 SMA daily for that top gap. That's what we're going to be looking for. So this green Fibonacci comes in. Lo and behold, directly on the 423.60. So this was our whole breakdown this morning, overlapping those fibs. And again, where I knew the dull knife bounce was coming to an end, all because of the double gap zone, all because of the floating candle. And even in heavy knife modes, it can be a little scary, but that's okay. So green off here. And if we do start to wash all the way back down, we know where the target's going to be, a live tag of that 423.6. So if we get a live tag down there, perfectly fine, but I think we're going to go up first. And this is the whole green zone. So long anywhere between here all the way up to the target of 596.36. If we happen to make it up a little higher than that, we have other algos to watch, but I'm only doing a one and done out of the gate because the trade is so heavy. We're already all locked out on every trade except for the two big accounts. We have hit fat greens across the board now, looking for... what do we got? 18. So almost 20 points, even from current price action. So we're going to hope for more dips. We're going to hope for that VWAP hold. We're going to hope to get into the green zone build here. So again, the golden pockets of the pre-market algo are going to be our main concerns here. We'll redraw those in the purple. We'll watch for the green zone here. That's going to be our build long zone. We like to do purple here on the golden pockets a lot of the time and help us with over-unders, just visual. And that's the zone we're going to be looking for those long builds. So we got the purple zone here and the clear shot over 593.45 support long. If we hold the top, obviously where this green zone channel starts, we're still up here. We still have 100 right here. Don't forget about this guy here. That's literally the top of the gap candles. So we're going to have a intra-gap play where the price action either hits the bottom of the gap and goes up or hits the top of the gap and goes down. It's all about the gap. The big gray zone right here. I don't care about any of these things before the gap. So if we're inside the range, it comes down. It could blast all the way up to here, reject, gap fill. I'll be short. If it opens up way low, comes down to that low gap and starts to push off here, best trade scenario, top of the gap. Okay, it's exactly where the green candle is drawn. Let's make this one a little transparent here as well. We'll try to catch some... There we go, nice and clean. And we'll try to catch some live trades on that on the big counts. So thanks for tuning in to the pre-market breakdown. That's the entire trade plan pending the long-term Fibonacci's and the algos this morning. We'll come back with a recap and see how those played out.